In this video, I'm going to be teaching you guys just the basics of my trading strategy. And I'm going to be giving you guys some rules and things you should be doing and paying attention to in this tutorial video so that you know how to follow my trades, you know how to follow my alerts, you know how to understand them, and how you should be expecting trades to come in, how you should be anticipating the market. It's going to be pretty much everything that I do, everything that I think I'm going to be sharing with you in this video tutorial. So there are a few ways that I consistently make money in this market. And these are a few sources through trading and investing that I make money in. The first and primary source that you are going to make money in consistently, you're going to make the most money this way, is going to be spot trading. Trading spot. What spot means is the physical coin. So whenever you're buying and selling a coin on Kraken, Coinbase, Crypto.com, Robinhood, essentially, you are trading spot. Spot, the opposite of spot, is leverage. When you're trading over on Bluefin and you're longing and shorting, this is not spot. You're trading leverage contracts. Like if I click short or long here, that is the opposite of spot. So that is not what I mean by spot. So the primary way I make money trading and the primary way you should make money trading is in the spot market. The secondary supplemental way that we are going to make money trading is going to be futures. We're going to be trading futures or leverage trading. That means we're longing and shorting cryptos. We're longing and shorting on 50x, 100x, 10x, whatever X it is that you are using. This is the secondary form of trading. It's not the primary, it's the secondary. And the third way we make money is we do trade some meme coins. So all of these together form our skill of trading and investing. The way we are going to make the most money through all of this, most of the time will be through spot trading, where we put $5,000, $10,000, $500,000, or $1 million, whatever it is, your trading size. We buy XRP here, it goes up, we sell here. That is spot trading. That is the primary way that you should be making money, not futures, not leverage, because leverage trading is very, very risky. You can be liquidated. It does require a lot of capital to actually sustain yourself with leverage trading. We're going to get into that in just a little bit. But the primary way to grow your money, to grow your account, is through spot trading. Because with leverage, you have to be right. Because if with leverage, you open a long position here and the market goes down and it doesn't return back up again, you have to take a loss or you get liquidated. With spot trading, you could buy here and yes, your account will be down, but you can hold it forever without actually having to close your position. When it comes to leverage trading, you can only hold your trade is depending on the amount of capital you have in your account or up until that liquidation price. So leverage trading is meant to be quick in and out unless you end up catching a short at the very peak of some type of macro move, or you end up catching a long here at the bottom of a macro move, which a lot of people in the Patreon did. Congratulations. But leverage is a tool meant to get in and out of the market. And of course, every now and then I get meme coins. I get inside info with meme coins and I share them with you guys. And 9 times, 8 times out of 10, those coins will do 2, 3, 4, 5x. And some random times, maybe once a year, twice a year, we will get a coin that will do like 50 to 100x. It happens every year. So all of those together, by taking profits consistently, is going to help us to grow our net worth. That is your goal. Your goal is to take your $10,000 or however much money you have, whether it's $100, $100,000, $500,000. Your goal each and every year is to grow that from January 1st all the way till December 31st. And if you remain in the Patreon, it should be quite easy for you to double your money every year, no matter how bearish or bullish a year is. You should be able to double your money, and that should be your goal, to make 100% every single year. That should be your goal. So now let's get into some of the basic things that you should expect. Now, in a bullish market, when we are in an uptrend and when things are very strong and when everything is pumping, essentially what we want to do is any type of dip or pullback, we want to buy spot and we want to ride out the pumps as much as possible. And when momentum appears to slow down, like we start to see a lot of selling pressure here, we stop pumping up and momentum starts to roll over and things look like they're going down and slowing down, we want to sell and take profits because there will usually be a pullback. And then once there's a pullback, a decent pullback, we find support, it looks like it stops crashing. We want to buy back in, ride that pump up until we find selling pressure, the market rolling over, and then we want to sell. And then we want to keep rinsing, repeating that process, buying the dips, riding it up until it looks like it's slowing down, and then selling, and keep doing that over and over and over again. And in a bull market, there's going to be a lot less frequency of the buying and selling part, where we could literally just buy and then it just pumps up almost every single day and we just ride it out. But once it starts to look weak and starts to roll over, Bitcoin starts to look weak and roll over, then we take profits and then we sell and we wait for it to crash. Then we buy the dip. We keep rinsing, repeating that process. That is how spot trading works. And in a bearish market, what's going to happen? In a bearish market, a bear market, we are going to be moving lower. So there's going to be crashes or we're going to be moving lower. But even though we're moving lower, there's still going to be bounces. You see this? There's still going to be bounces. And this is what we want to essentially play. We don't want to just enter because it crashes. We don't want to just buy because it crashes. We need to see support. We need to see that it's holding up. There's a lot of things that we want to look for, a lot of things that I look for before we buy. Because if you are trying to buy in a bear market, sometimes you're going to buy here and it actually can go way lower very quickly. So you have to be very, very careful with that. So there's certain things that we look for. And ultimately, the thing that we look for is we pay attention to Bitcoin. What is Bitcoin doing? If Bitcoin is holding strong, Bitcoin is moving up higher, everything else should pretty much hold strong and move up higher as well. There's a lot more nuances to it than that. It's not as simple as that, but that's basically the thing that we want to pay attention to. Is Bitcoin topped out? Like right here, Bitcoin right now, as we are watching this video, this looks topped out to me. So I'm pretty sure Bitcoin is going to move lower. So when I understand Bitcoin is probably going to do something like that, I want to be really careful with entering spot on altcoins. I want to wait for Bitcoin to crash, hold support, and then I want to get involved in altcoins or Bitcoin. So there's certain things that we will be patient for these types of moves. So essentially, the strategy with spot is, I want you to think of it like this. Essentially, what we want to do with spot is we want to buy at a discount and then we want to sell in a premium. We want to sell when it bounces up. That's all we're looking to do. We're looking to find a low price, because whenever there is a low price, these low prices don't last long. They typically will bounce up. And we just want to capture a move like this. We can do that once a week. We can do that multiple times a month. And the bigger the crash there is, the bigger the discount there is, the bigger the reaction or the bounce will be. So if it's just a small little pullback, there's only going to be a small little bounce. But if there's a massive crash, this is where we really want to get involved in, because whenever there is a massive crash, as you could tell, you probably have witnessed countless times, there is always going to be a big bounce. I mean, look at this. Here's a huge crash for Bitcoin. Look at this huge bounce. And altcoins do the same thing. Look at this big crash, big bounce. This is what we want to play here. And that's where the money is at. The money is not in after it bounces up and is chopping around. You don't want to be trading that. You want to be trading and waiting for very big moves. So the bigger the move, the bigger the bounce. And that's essentially what you want to do. And if you do that with spot and you are patient and you wait for these crashes that do take place at least once to twice a month, I believe, and then 2 to 3 times a year, there's a really, really big crash. Those are the times that you are going to want to trade. And you are going to want to buy Bitcoin in spot because it's the strongest coin. And then any other altcoins that are strong, really, really strong altcoins. Some strong altcoins, for example, are XRP. Every single time XRP crashes, it bounces up. Like, look at this. It crashed the other day. It bounced up 60%. If we go to Ethereum, look at this. You see Ethereum bounce up top to bottom, 38%. That is pretty good. If we look at Dogecoin, we can see that it bounced up 45%. So basically, just the coins I showed you, XRP bounced the strongest. We want to buy the coins that have strongest bounces consistently, not just one strong bounce, but the ones that are consistently the strongest when it comes to crashes bouncing. And then if there is a big crash after a really big pump, and it starts to look like we're finding resistance, there's some selling pressure coming through, Bitcoin is starting to find resistance, we want to take profits there. You can take half profits, you can take all profits. What I particularly like to do is take all profits. But if it looks like a part where that's actually like the bottom, we're probably going to head up for the next 6 months, you might want to hold on to that trade or at least take half off. And if it dumps down, you get at that other half that you sold off. There's things you could do like that. But personally, I recommend selling it all, letting it pull back, re-entering once we find support, and then you catch the wave back up. It's just constantly taking profits. Buy low, sell high, buy low, sell high, buy low, sell high. Then eventually that $10,000, I'm just using it as an example, after a couple of crashes could be $25,000 in 3 months, maybe, depending on the crash, depending on the move. Now you're at 25,000, and then you can grow the 25,000 to 50, and then 50 to 100, all in 1 year. It could be done. Now let's talk a little bit about leverage and how that works, how you guys should expect to trade leverage. Trading leverage for me is not my, I do make money every single week, most of the part, trading leverage, but the only time I'm going to trade leverage is when there is a really strong crash. That's when I'm really, really confident. There are certain things that I want to look for and pay attention to, which I can't explain to you in this video because it takes a lot of years of experience to understand what's going on. But when I'm sure, when I see a really strong crash, there is a very, very high chance that there is going to be some type of bounce, at least to here or something. That's when I want to get involved in leverage. And I like to always buy Bitcoin, and then I like to buy those strong altcoins. I like to buy leverage and capture a strong bounce and then exit. I usually don't capture these whole moves, but there is a way to capture these whole moves. And the way you do that is let's just say you make an entry here, it starts bouncing up. You can start trimming some profits, move your stop loss to break even. And then if it cases it runs up massively after a huge crash, you just hold on to that position. So essentially what that means is, let me just open a trade here for us. So let me open a trade. I just opened a trade on Bitcoin. I don't really care about this trade. It doesn't mean anything to me. But you can click here, take profit, and you could drag it down, or you could drag it up here. This is your take profit. I don't use take profit. I meant stop loss. You have stop loss. I could drag it here. This is my stop loss. You always want to have a stop loss when you're using leverage, for the most part, in case there's some type of black swan event that can take you out, and it would not be a good thing. But what you could do is, like, let's just say we long here, Bitcoin goes all the way up here, so you're in big profits. You can always drag that stop loss to break even. You see how it's break even there? I'm going to remove it there in case it stops us out. You always want to have your stop loss to break even, and maybe a little bit above break even, because there are fees when you open and close the trade. So whenever you catch a trade and it moves massively, always move it to break even. That's something that you certainly want to do. And as well, when you are in a trade position, you can close 50% of the trade. So I could take 50% of the profits after it moves a certain position, and then I can leave the rest to ride out in case it's like a macro bottom, a macro top, or something where there's a huge potential that it can move way further from our entry. But ultimately, I'm going to close this position by just pressing the X here. But ultimately, ladies and gentlemen, leverage is to get in and out of positions. It's to get in and out, scalping. Leverage is meant for scalping. Once you capture a move, you want to take profits aggressively, because every single bounce, every single pump, whatever move you catch, there's always going to be a retrace, and it's going to come really close to your break even. Like, for instance, let's say you shorted here. Look, see how it crashes? You're in huge profit, but look, it's going to come back up, and you can re-enter here. Your break even might be even here. So you could be in a huge profit here, but it's going to come to your break even and take you out and then go. So with leverage, once you capture a move here, you take profits. You capture a move here, you take profits. And you keep doing that over and over again, and you'll be able to pay yourself every single week thousands of dollars, depending on the amount of money that you trade with. So leverage is meant in and out of positions when you are 100% sure what the market is likely to do. And for instance, some things that make me 100% sure of what the market, I would say maybe not 100%, but 90% sure what the market is going to do. Bitcoin bounced up here about 12%. So once Bitcoin bounced up 12%, altcoins started to roll over. before them. And so that kind of gave me a sign, like, okay, the market, people might be taking profits. And we're also seeing a lot of sell pressure. Like, look, it tried to pump up here, rejected, rejected, rejected all throughout here. It's starting to roll over. Here is when I said, okay, let me open a Bitcoin short. Let me capture a small move. It went here. I took profits. Boom. I could have held it and it would have crashed way further. But guess what? I scalped and secured that money. And I keep doing that over and over by taking profits over and over and over again. And that is going to grow by 10,000 to 11,000 maybe that week. But it's just going to help me to grow my net worth every single week, every single month, over and over. The people that hold on to trades and positions forever and like, oh, it's going to go, $10 or $15. I'm just going to hold. There's going to be this news and that. But you're up 700% and not taking profits. You are going to lose. You're not going to make as much money as the person who's taking profits after the market appears to roll over. It looks weak. And you're not going to make as much money as that person. The person who trades and takes profits over and over and over and over and over again, guess what? They're going to make a lot of money. They're going to make money consistently. And yes, there are going to be times where you sell and take profits, the market pumps up against you, but don't worry about that. Don't let that phase you. You just have to, if you end up at some point, this is a rule that you want to follow. If somehow you exit, but the market keeps pumping against you, do not chase that pump. Do not chase it. Let the market crash. Wait for the market to crash before entering in. So just be very, very patient and understand that, hey, you're following your plan. Be happy with your plan and the steps that you took to make that money and capture those gains. And then look forward to the next trade. Don't worry about the trades that you're missing out. Oh, this pumped here. I wish I'd have bought there, this or that. Don't do that. Focus on the current trade and also focus on the next trade that's coming to you. Another tool that you guys should really be using when it comes to all of this is going to be ALGOSNIPER. There are different timeframes that you want to pay attention to. Like when the 15-minute time frame, I would say the 15-minute, even the 10-minute time frame for ALGOSNIPER is going to be really, really good when you're looking to take profits rather aggressively. Because look at this. Bitcoin pumps up, and then once Bitcoin starts breaking under the green band, starts closing under, and the band flips red, that usually means that momentum is going to flip to the downside. And we can see that it clearly does this. You're also going to see these red diamonds or like take profit signals. These are things that you want to pay attention to as well. So whenever you see that, that could be a really good trade or an indicator for you. So the 10 or the 15-minute time frame is going to give you a really good consideration of when to take profits as well. For instance, the 15-minute time frame could be really, really good when you're looking to enter, because look at this. Here we have this big crash. It's just selling off, dumping all the way down. And finally, when it bottoms, you see the price above the 15-minute time frame, the band flips green. That's when momentum is flipping to the upside, and that could be your entry versus knife catching, trying to catch all these little bottoms, losing money. So the 15-minute time frame could be also a really good entry as well. If you're taking a look at an aggressive entry. The 30-minute time frame for me personally has worked out really, really good. But you also have to understand when there is a really big crash, like a crazy flush, you are going to make the most money if you obviously buy down here and not until it's confirmed. Because if you wait until it's confirmed, you might miss out on a few percent. And for XRP, that could be even, if you're buying spot here, 32%. So when altcoins flush really, really hard, it's best to buy at like key levels of support. And maybe planned levels that you had planned to buy at versus waiting for that confirmation. The confirmation is a really, really good tool, but there's going to be times where you're going to want to trade more aggressively outside of the confirmation. So these are just little things to pay attention to. Also, another thing with ALGOSNIPER, when it comes to timeframes, and you really want to see like during a strong trend, when that momentum is rolling over, when you should be exiting, the 4-hour time frame is really, really good, because look at what happens in the 4-hour time frame for XRP or altcoin. When that band flips red, look at what happens. You get a huge crash. Look at band flip red here, huge crash. The 4-hour time frame is really, really good. As well, even for Bitcoin. Like look at what happens when the 4-hour time frame flips red. We get a big crash there, and even the daily. So the 1 hour, the 4 hour, the daily, These are really, really good time frames. But look at this. The daily time frame now has flipped red for Bitcoin, which means that we could see a huge crash. Anytime that the daily time frame has flipped red for Bitcoin, we've seen really strong crashes. So something very, very important to pay attention to. The daily, the 4 hour, pay attention to these time frames. Also, this big little line right here is a 200 EMA. Typically, when that is lost, which we're seeing is lost now in the 4 hour time frame, like a downtrend starts, like a strong downtrend can start from that. So pay attention to that. We also see that is happening for XRP. It's rejecting this level. It's not looking good. I mean, in the short term, this video is obviously, XRP is going to be higher, lower in the next few months when you watch this video, or however long from now. So the two main things that you guys are going to use to make money is going to be spot and leverage. The leverage is, again, in and out of positions really quickly. There's certain things you want to pay attention to, but the majority of your money is going to be made through spot. And the spot alerts are going to come when the market crashes big. Whenever there's a big crash, that's when you're going to want to start to buy spot, because no matter how bearish or bullish the market is, let me take the indicator off. If there's a huge liquidation wipe and like a 50% crash in like a day or two, there is always going to be a huge bounce. You're just going to want to be looking to play these bounces. Every single crash, ladies and gentlemen, there's going to be a big bounce. That's what you want to do. You want to get involved on these big crashes, because there's always going to be a big bounce. No matter how bullish or bearish the market is, here's a bearish market. Look, you get a big crash, it bounces up big. Big crash, bounces up big. You want to take profits. This is your trade here. But doing this over and over again, once a month, there's going to be usually a big crash. That is when you're going to want to get involved. But you're going to want to be involved in Bitcoin, and you're also going to want to be involved in the strongest altcoins, because these strongest altcoins can bounce 20 to 30 to 50% in a single bounce that could take maybe 5 days, 4 days. And if you're doing that every single month, that's like 50% a month times 12 months. That's literally like 600% a year. And you can make that if you are trading properly and perfectly. We're talking about perfect execution. In the beginning, you're not going to have perfect execution, but again, you need to take profits. You need to buy low and sell high. Stop holding on to ideas like, oh, it's going to $10,000 per coin. Just trade the charts. Don't trade what these people are trying to hype you up to trade. Just trade what is given you and take profits always. And that taking profits is always going to add up for you. Some rules you should pay attention to: never chase a pump. Like after the market's pumped up, you don't want to be entering there. As well is when the market is crashing, you don't want to be selling during the crash. You want to be selling when the market is green, when it's pumped up. You don't want to be selling while it's crashing, because it's going to probably bounce very, very soon. So never do that. These are rules that you want to pay attention to. I personally don't recommend using stop losses with spot. I recommend putting stop losses with leverage trading, and just make sure to take profits over and over again. Now, some rules when it comes to leverage trading. When it comes to leverage trading, one thing you definitely guys want to have on is, you're going to click the settings here, hedge mode. You definitely want to have hedge mode on. You need to be out of all positions before you get changed that to hedge mode. And I personally like to trade on cross leverage. This is what I personally like to do, but that means if you don't have a stop loss, that it can wipe the entire account balance in your account. And on altcoins, if you're trading altcoins, that could happen quite easily with one big crash or black swan event. So be really, really careful with that. Always have a stop loss on when you are trading leverage. But typically the way I like to open positions is, let's just say I have a normal trading size of $1,000 on 100x leverage. That's my normal trading size, $1,000 on 10x leverage. What I will do is, when I'm starting to want to get into a position, instead of putting $1,000 on that 100x leverage, I want to put $100 and scale into that position. Because if I scale into the position, I open along here and the market crashes, I'm not going to have I'll have a small drawdown, but it's not going to be big. And I could open another position, and that's going to bring my average price down here. And I can even open another position and even bring it almost to break even. So scaling into leverage positions is highly recommended, because most of the time you're not going to be 100% accurate. Like, you're not going to buy along the exact bottom unless it's these crazy liquidation events. You're going to want to probably go all in at that time, not all in your whole account, but all in with your normal trading size or whatever the planned trading size you have is. But your trading size should be, you want to essentially risk 1% of your account, your whole all of your money together, like your whole trading account, all the crypto you have, you want to essentially risk like 1% on a trade, or 1 to maybe 3% on a trade, which means that if you were to get stopped out or liquidated, you would only maximum lose 1 to 3%. That should be like your trading size. That should be your risk management. You don't want to be putting your whole account on one trade so that if it goes down 1%, you're going to be liquidated, or it goes down a few percent, you're going to be liquidated. That's risking 50 to 100% on a trade. You don't want to do that. You want to risk 1 to 3%, because chances are that the trade can go against you. There could be some news that the trade will go against you. So that's why scaling in is really good, where I make an entry here, it goes lower, I enter my other size here, it goes lower, I enter my other size here, it goes lower. But once the market really confirms, versus I'm adding lower, lower, lower when it goes against me, once the market confirms and looks like it's actually going to go in my favor, I'm going to add more and more. And eventually I'm going to be full size position where the market's moving in my favor. So scaling in is something very, very important. And typically you want to put a stop loss where it's just going to protect your account. You don't want to put a stop loss to an area where it's too tight, where you're going to get stopped out. You want to put into an area in case there's a black swan event that you can be protected and not be completely wiped out. Or you put the stop loss to an area, that's where your risk, that's how much you're willing to risk. You don't want to risk any more money than that. That's essentially where you want to put your stop loss. So you guys should be trading with ALGOSNIPER. I highly suggest using this tool, learning the tool. There's a tutorial on the website. I'm going to make a new tutorial very, very soon, so stay tuned for that. As well, you guys should be trading over on Bluefin. You're going to have the cheapest fees when it comes to spot and also futures, and you guys get those deposit bonuses. Now, if you guys want to learn how to trade, I highly suggest that you join the school and VIP membership within the Patreon every single Thursday, unless it's like a holiday or something. We meet for an hour and I teach you guys literally everything. All of my tricks, everything you need to know is going to be there. And there's a lot of one-on-one time there as well. So definitely check that out. If you guys want more tutorials like this, more videos like this, let me know. I think I want to start making them for you guys in the Patreon. Peace.